Hello, this is Joe. AskJoeAboutMoney.com. And today we're going to do the market recap for February 3rd, 2023. As always, we're going to start off with the 60-minute chart of the S&P 500. I actually trade the MES, which is the micro E-mini. And the first thing that we look at is I'm going to look at where my trend lines are, and I'm going to look at what the market is doing overall. And so as we were talking about back here, if you guys remember, we were at support, and look at the move that the market made off of support. Now, we've broken, let me adjust these trend lines there. And this is the trend line to the upside. So again, when we're looking at what the market has done, I'm simply looking at what the market has done. We're not looking at predicting of what the market might do. We're just saying this is what the market has done. This is what it has done in the past. So we do know that we are in rising hot. So here's how I look at it. Here was a low back here. Higher low, higher low, higher low, higher low. Break above resistance trend line to the upside. Now, there's nothing I said there that's predictive in nature. I'm just telling you what happened. Then if we go back even further, my resistance zone, it now broke above my resistance zone. But again, markets aren't perfect. Is this going to be a situation where this is the breakout and the market goes higher from here? It can do that. Or is this going to be a situation where it's going to reject from here and come down? It can do that as well. Here's the important lesson here, okay? Is because, I hear, oh my God, Joe, it broke resistance here. We broke out. Okay. On a 60-minute chart, we did break resistance, okay? But now we're consolidating up here, okay? Do you see so far big green bars that are going above it? I do not. So here, to me, this is now a zone. It went through resistance. Now we need to find out, are there buyers above this level to bring it up for the next leg up? Because what I can tell you is this, is that if some amount of time goes by and there aren't buyers, there's not enough energy to buyers, then the market could potentially come down from here. So this is a really important zone, okay, as we go into next week's trading as well, because we need to know, or not to know is the wrong word, but we're going to find out, will the market resolve its way up or down? And just like from here, the market, just look back here. Where did the big move in the market start from? From here, it started from a point of support. Okay, we had this level of support drawn. This is not magic. This is just a rising trend line. So guess what? The market, at this point, I was saying, well, the market could break support, but look what it did from support. So we're just recognizing here, this is long-term resistance. And now we're at this point in this resistance. So we are technically above it, but the market could still fail from here. And the market could also resolve its way up. So just knowing the possibilities. This is what I'm doing as I'm coming into the market and preparing for the market. Now let's go ahead and let's look at my trades for the day. We're going to look at a 5-minute chart. Okay, and I have my blue line drawn here. We're going to go bar by bar. What happened here? So the market is going to open. There was non-farm unemployment data. This was a really, really heavy news week. We had the FOMC on Wednesday. Non-farm payrolls yesterday or Friday morning. And so now the market opens and the market gaps down. Okay. Now here's the thing when the market is gapping down. First of all, we just talked about how the market is in an uptrend. Okay. We just talked about how the market, this is the bigger, if we just zoom out, right? This is the bigger picture. So again, if you're going to short into this, that's okay. And because we could always short for a move back down to support. And I like those trades. But remember, we're fighting the uptrend. Now, we do see some topping action here. But really what I'm going to do is, what I look at is that, after I've done my analysis of the market, once the market opens, I know that in the back of my mind, but I can't let it influence me one way or the other, because now I have to see what the market's going to actually do. Because we never want to bring our biases to the market. So let's see what happens here. First bar, big green bar, little wick on top, but big green bar nonetheless. 41.39 to 51. That's a more than a 10-point green bar. And now another big green bar. So, we opened really far down from the moving average. The moving average is here. and we opened up down here. So let me ask you a question. I always like to think from the opposite side. If you were thinking of shorting, right? Do you want to be shorting right now when you're below the moving average, and instead of seeing big red bars as a continuation, you're seeing green bars? Like, would you want to short? Would shorts be interested here? And I can tell you, shorts would not be interested here. Okay. So now at this point, what I'm thinking is, okay, well, I'm interested in the long side at this point, because I know that I would not want to be short after seeing against these big red bars again. And that could change after the next bar. But at this point, I am thinking long, right? So let's see what happens next. Now they put a green bar, and it seems like it's slowing down, okay? Because now the next bar is smaller. Now, what I like to do in this situation during the opening range is when I see this and I want to get long, I don't want to buy up here. But what I'll do is I'll do a simple measurement. And again, when it comes to Fibonacci's, I don't really believe in Fibonacci's. The one number that I look at, and it's not really a Fibonacci number, but I just use that as a tool, is the 50%. Okay, 50%. So now what my theory at this point is this, is that the market opened up strong, but I don't want to buy high because we still have a lot of resistance. So I want to buy at the lower end of this range. So how I'm going to set up this trade is right here. This is going to be, so this is 50%. And so 50% from here to here, that's my risk box. But actually, because I don't, as you know, I don't put my stop right below the low. I give it some room. So what I do is, let's say we'll give it from here, we'll give it 39. Let's say we'll give it 5 points. So let's say give it to 30. Let's say give it to 34. So this is essentially my risk box. What does that mean? At this point, this particular time in the market, I would like to buy from here to here. Right? Now, how I buy through here, this is going to depend on how the market develops and how it gets there. But what I would have as a starter position is I would go ahead and put in a buy order, just a limit buy order right in the market. And we're going to do that automatically. Okay, so we're going to okay. So what I do at this point, as I see this, is I want to buy a 50% retracement off of this move, and my stop is going to be below this box. Okay, so I am long. I want to be long from here. Well, Joe, what if the market just keeps going up? Well, then I'll miss it. Got to be able to do stuff like that. Okay, you got to be able to be open, because again, you can't have FOMO. That's not how professionals trade. Can't have FOMO. Here we go. All right, next bar, another green bar. Right. So now what I'm going to do is I'm going to extend this as a 50%, and I'm going to say that is the 50 move to the upside, and I'll be willing to buy. Oops, let's. And now my 50% pullback is here. And now, because again, now you're still, remember, your stop has to be based on what the chart is doing, not where you wanna put it. So now my risk box has also increased because my stop has to be further down. Okay, we don't want to be putting tight stops. We want to be adjusting our size. I mean, just for example, the MES is 1/10 of the E mini, and if you can't trade that, then you could trade ETFs. There's no excuse. You could lower your size where it's so small in this day and age, and everything is so liquid that there's no excuse. All right, there's no excuse for not being able to position size correctly. So again, I'm looking at the chart. I'm trading off the chart. I am not trading off of my P&L. So here we are. So next bar is, I think that bar got me in. I don't remember if I got in on that bar. Yeah, maybe not. Maybe it didn't hit me in this bar. Maybe it hit me in this bar. Okay, so now I'm long. All right, so now I'm long. So now what am I? Well, at this point, my stop is here. I'm also willing to buy more. I'm not going to put in another limit order because now I'm long from the 50% retracement. But now what I want to see is what happens here, right? Because let's say the market comes all the way down here. Well, potentially I may want to buy here. It depends on how it gets there and what happens. In the meantime, here's my position. Here's my risk box. So let's see what happens. All right, so it's holding that level for now, and big green bar. Okay, so now at this point, okay, now what we do is we're going to move it, and this is a great example of how we move our stop based on market action, not based on feelings, okay? The market doesn't care about our feelings. The market doesn't care about our P&L. The market doesn't care about this stuff. The market cares about where were their buyers and where were their sellers. So that's what we're going to look at, okay? Let's be professional. All right, so we started our stop down here. And now after this, now my stop is being moved. At this point, my stop is being moved right below this one tick, because if it's, you know, my goal at this point, because now we're developing into, so if this was our initial risk, right? So check this out. If that was our initial risk, and so that was our initial risk, and right here, so if this was our risk, which was this box, this box right here, we're approaching a 1R win. Okay, we're approaching our 1R win. Again, that doesn't mean anything in the sense of how I'm going to manage my trade, but it does mean something in the sense of, all right, that's, you know, and again, see, now here is where I disagree with a lot of educators. Educators would say here is that, well, you have a 1R win and lock in something or bring your stop to break even. But again, with this trade, I have potential to go all the way up here, right? And I have to let the market ebb and flow. So for example, if I put my stop here to break even, just because I don't want to lose money on the trade, you're putting your stop right at support. I mean, so why would you put your stop there just because that's where you got in? Or why would you just put your stop up here because you want to lock this in? Again, I trade much bigger picture because I like to capture the larger moves. And you're not going to capture the larger moves if you're going to micromanage your stop. That's why it comes down to position sizing. So right now my stop is here. But Joe, if this turns around, it'll turn into a losing trade. Yeah, that's okay. Again, I'm letting the market, it doesn't matter to me whether it's a winning or losing trade, because depending on what happens here, probably 80% of the time I don't get out where my stop is, because if I see a red bar here, I see it failing, I'll get out up here. So but that's where the stop is. Okay, the stop is down here. And that's, I think, the difference is that we're not going to wait around and let the market hit our stop. Sometimes it does that because the market could do anything at any time. But my mechanical stop is there, and I'm going to see what price action does. All right, so now at this point, green bar, okay, it opened above, green bar, but it failed right up here. So now I'm on high alert. Okay, I'm not going to move my stop, but I'm on high alert because this may be all the energy the market has, right? So at this point, I'm thinking I do want to preserve my profits because I just saw that. We didn't know that before this bar. Okay, let's see what happens to the next bar. And here we go, another big green bar. Now at this point, after I saw this, the market came down, it went up. Now at this point, my stop is going to be moved up to here. Okay, now I'm going below here. But again, I'm looking, is this going to accelerate to the upside? I don't know. Or is it going to fail? There's a lot of support up here. It could fail. Okay. Again, my stop is here, but I would like to capture this because if we look in terms of R, where are we in terms of R? So we're approaching about 1.5 R trade here. Yep, by 1.5 roughly. And let's see what happens. And then a big red bar. So at this point, okay, I'm just going to move my my stop was there, and my stop was moved right below this red bar because I do want to capture it. At that point, I'll lock in 1R if that does happen. And it did it. I believe it didn't. Did it take me out there? It did. It did. So I actually got out here. Okay, that's fine. Red bar, I got out there, and that was my trade. There's a 1R trade, and the market continued. Went up the next bar, but let's see what happens. Okay. So this is a case where, you know, if you wanted your stop looser, you could, but I did want to lock in that 1R, and now you can see this, we're up here. So, okay, that's trading. So now let's see what happens. Now this, again, to me, it looks like popping type action. Here's resistance from yesterday. We have some, back. We have candles that are not very enthusiastic, and let's see what happens. Believe it or not, even though I trade this stuff, when I'm doing the reviews, I don't remember what happened. So I do trade it okay. So now what I'm seeing. So again, this is still, we are in a tight bull channel at this point. Okay, we're in a tight bull channel. We draw this. You could draw it like that. And then you could also draw another faster support line, something, well, can't draw that one yet, but let's just keep this here. Okay, now at this point, we draw this in. So we're in a typical channel, but is this going to be topping action? We're coming into a resistance zone. I wouldn't mind taking a short somewhere in this area, but let's see what happens. All right, now, this is going to be very telling here because we're going to find out now the market at this prior high, are they going to be buyers or sellers? Let's see. All right, so far, sellers. So we rejected, it made a lower high. Okay, so so far at this point, it made a lower high. Okay, we see that. Okay, now it broke out. Okay, it broke out of that lower high. Okay, so, and then it rejected. All right, so now, a lot of times we call this a wedge. A lot of times the market does that. Okay, so now again, I'm not seeing enthusiasm up here. So now for me, the bear case is starting to build. Okay, the bear case is starting to build. Now, okay, a big red bar. Okay, so now you have red bar, small green, red bar. Okay, but we are coming into support. Let's see what happens. Okay, green bar, red bar. So now we see this here, but again, this could be just a bear retracement in an overall bull trend. Green bar, green bar, green bar. Now this is important, right? Because this could be the potential of a potential left shoulder. Okay, head and shoulders, left shoulder, head, and right shoulder. Now this is where I'm starting to really hone in and say, well, okay, this could either make a new high and break out, or it could fail here at a lower high, and then I'll be interested in shorting. Let's see what happens. It's all about, when we talk about support and resistance, what it's about is how does it react at support and resistance, not that we're at it. I love being at support and resistance because the market needs to make a decision, right? So the market needs to make a decision now because, like, okay, we ran up in the morning, pulled back, tried again, no buyers. Okay, tried to the downside, no big sellers yet. But what happens is if we reject again up here, the market is going to, if we don't find buyers, oftentimes the market's going to do the exact opposite of going up. So we tried again, a push up, failed immediately. Now we're trying again. Let's see what happens here. Okay, so far it's not making it. So far it's not making it. So far, okay. So look, so we're not finding buyers here. Where are the buyers? Do you see buyers in these candles? I don't. All right, and then finally, when I saw, that's where I got in. Once I saw, so you had at this point, okay, at this point you had failure, okay, lower low, okay, head and shoulders type pattern, and we had a red bar, small green bar, red with a big wick on top. Tried again, they even went higher, okay, and then red. And then higher, or they couldn't even make it that high, big red bar closing at its low, I got in here. All right, so now where is my stop? Okay, my stop at this point, again, the chart tells us where our stop is, not anything else. So I'm in from there, and my stop is going to be, in this case, my stop will be right above the high, because again, that's just if this is going to start going back up, I don't even want to wait for it to get up there, but this is that's my risk. All right, so far so good. And now a big red bar. When I see this, I actually add to my position here, because when I see a 5-minute bar, that closes that big, likelihood there's going to be another leg down. So let's see what happens here, and another red candle. So again, I still can't even move my stop because I have to see it retrace first. Okay, so let's see what happens. Okay, now at this point, so my stop my stop was up here, and now at this point I have to capture this, right? Because at least that. But again, so I want to get out even lower, because now at this point it's looking as an exhaustion candle, right? I mean, all these red bars in a row. I'm not just going to get out because I feel like it, but I'm going to be really quick. So now I see this green bar, and after I see this green bar, my stop is just going to go right above it. All right, and that was it. So that was the trade. So that was the trade. I risked this much. I made that much, and I gave up. So we talk about maximum favorable excursion. What does that mean? Okay. Well, what that means is this. So risk, we all know. This was my risk up here. Okay. So the risk, this is how much I risked on the trade from here to here. This is how much I captured. So that's a multiple of, I don't know, whatever. That's about 2 times 82. That's 10 points. And I made 82 to 60. Yeah. So that's about a 2R trade. But I gave up about, what's that? 50 to, but I gave up. So I gave up about a 1R. Okay, so as long as I'm capturing, however I'm doing it, 2/3, like I did here, okay, that math is symmetrical. That math makes sense because my reward was 2 times my risk, and I gave up less than 1/3 of my entire. So if this was the entire, when we talk about maximum favorable excursion, we say, well, how much was available from when I got in to the if I got in at the bottom tick, right? Perfect. I would have had that much in gain. But you have to give it room, so I gave back that much. Okay, so to me, that's very satisfying. That's very acceptable, as long as not every trade is going to work out that way, obviously, but the potential was there. And because that's actually what happened. So this is the framing that we want to look for. Okay. Do I see a 2-to-1 to the downside? I did, because support was here. Did I keep roughly 2/3? I did. Well done. Trade well. I will see you guys on Monday. And remember, on the weekends, okay, your trades happen during the week. On the weekends is the time to prepare. We prepare. We work on our charts. We work on our mindset. We work on our physical body. This way we're ready and prepared for Monday. Have a great weekend, and we'll see you guys on Monday after the close.